So what I want to get into today in this video is talk about why most traders won't make it and kind of the obstacles that are kind of naturally built into this, let's say, profession. So let's jump into it. All right, so first off, the biggest hurdle that everyone's going to run into off the start is their expectations are going to be unrealistic. And like, what do I mean by that? Basically, when you're setting unrealistic expectations, you're kind of setting yourself up for failure because you're likely not going to achieve the goals you thought you would, or you achieve them really fast and you get a false sense of, what's actually probable. So for example, a good return in the market would be around 12%. No one would argue that you are doing bad if you're averaging 12%, 10 to 12% a year. That's kind of the stock market average. The issue is that you get people that come into this and they try to take a little bit of money and turn it into a lot. And naturally, when you do that, you're going to incur a lot of risk because the only way to get outsized returns is to have outsized risk. So, first of all, if you're making 10 to 15% a year, you're doing just fine. That's not bad at all. But I know that when people, well, how much money do I need to start with? Well, can I just start with $1,000? Okay, so if you start with $1,000 and you return $200 on the account for the year, would you feel like a profitable trader? Would you be like, oh, I've achieved my goal and I'm satisfied? 100% chance that this is just not going to happen. You're going to be upset that it's only $200. Like, that's nothing for the whole year. And you kind of just cast aside the reality is that you just made 20% on your account. Now, if you did that in one or two trades, I can guarantee you that the risk on that trade, unless it was, a longer term trade, was probably pretty high. And you can only do a handful of those till you lose the account. So having your expectations stay unrealistic kind of forces you to take outsized risks, which forces you to have the potential to lose your account. It doesn't matter how good of a strategy you have. It doesn't matter how good your emotions are. If your risk is out of line, it's a matter of time before you blow up. And that you may make money in the process and you could have withdrawals, but just understanding that the game you're playing, sometimes you will lose the account. And most people, I don't think, get into trading to try and lose their account. So if they align their expectations correctly, their odds of success in this go up dramatically. So, that's kind of like the biggest point, is that your expectations need to be realistic. And that you need to understand, if you're going to start an account with $10,000, then you make $3,000 throughout the year on that. That's good. Okay. Until you have more experience in kind of understanding the pitfalls, doubling, tripling, flipping accounts, it's a pipe dream. People do not regularly flip accounts. If they did, people would throw money at them, millions of dollars, if they could do it consistently while holding good risk management. So there's a huge facade on the internet nowadays that everyone can just, I'll fund an account with $200, turn it into $1,000, and it's good to go, and I'll just keep doing that. And I'm a small account, whoever, like, no. I've been doing this long enough to where I've been there and done that with just about everything. And I think the only thing that I've seen lasting success with is managing my expectations and being truthful to the process. And that's going to kind of wheel into our next point. So this one is a big one. And I think it's overstated, so it's a little cliche, but it's lack of patience. If you're not patient with this process, you're not going to be successful. And everyone says, like, I'll talk to these new traders all the time that want to learn, and they look at how I can read the market and they're like, oh, that's like super accurate. I want to be able to do that. And they give it 2 months and they're like, okay, well, I'm not to that level yet. So I must go find a different strategy because that guy just made that trade and made money on that. So he probably knows, and that's a big flawed way of thinking, because it's just like with any skill, any art, you're going to have to dedicate time and effort, and there just is no shortcut. I know everybody wants the 30-minute video on how to trade and, oh yeah, this one-time, video or this one-time fee, and I'll give you this and I'll give you that. And it's just not the case. It's going to take repeated efforts over time. You're going to make mistakes. You're going to fail often. And that's just a part of it. I the biggest analogy I've always looked at it as, someone going to be a doctor trying to go make, 600,000-700,000 a year, they're willing to lose money for almost over a decade every year, lose money. And not just a little bit of money, like a good amount of money. Like when you're graduating, I don't even know what the average debt out of med school is now, but I'm going to guess it's over 400,000 to 500,000, probably around there. So you're not willing to lose 4 or 5 grand over a year. That person's willing to lose, way more money, but they trust that the process will pay off. And necessarily, you don't have to lose all that money, but I'm just trying to get you a grounded expectation of if you want that high income and that lifestyle, it's going to require sacrifice. Unless, I don't know, unless you get lucky with some things, and that plays into it too. Where you're born, what access to what tools you have, all matters. So coupling patience, and the next point is going to be discipline. So having your expectations set, having patience to let the plan play out, and then executing it. Execution requires discipline, which is waking up, daily, weekly, or whatever your trade plan is, whatever your expectations are, whatever your plan you have set forward, but to actually execute on it and try to understand. I think a lot of people will look at the outcome of trades and judge them if they were good or not. And while yes, P&L is like a good indicator that you did good, but what was your risk? What were you willing to lose to get that? And does that fit in line with sound account management? Only you know that. Only you know worst case scenario, what would have really happened, right? So having that discipline to follow your plan. And then when you don't see a trade and the days look like, when the day looks like this right here, that's a very tough day to trade. I don't care who you are. That is not easy. No one's going to look at this and be like, oh yeah, I walked in there and I had no drawdown in any of my trades and I was just, very good. Like I can trade it, but I set my expectations very low. When I see overlapping candles like this is my experience coming in and telling me you're going to be in for a painful day if you size up. It's going to be hard. You may win, but it's not worth it. We're looking for the easy days, easy movement. So having that discipline to sit through here and honestly say, hey, maybe today's the only day I can trade because I work a job and Friday is the day I can trade. So I'm going to sit down, I'm going to sit here for, 6 hours and I'm going to trade, I'm going to make money. If the market is not offering the opportunity to you, have the maturity and discipline to walk away from it. This is what held me up for years. I really cannot stress enough that the discipline to wait for what you're supposed to and be an adult, be a professional at this. Don't just go in there and start gunslinging around with all these candles because they will take you 100% certainty. So, discipline is never to be overlooked. And then the final thing I just want to touch on real quick is that bad advice is everywhere. It's hard to say who is successful at trading and who's not unless I just sit with them and they can actually call the market. So many things are faked now that I think that there's like a detachment growing from, oh yeah, I'm just going to go study for, a little bit. I'm going to become a successful trader and then I'm just going to make side income doing that. The reality is 99% will fail at this in the first 2 years, I think, maybe 5 years. I think it is like small businesses, right? If you treat it like a side thing, unless you're long-term buying and holding, and then in a bull market, everyone's making money that's holding. It's not, I wouldn't call that day trading. I'd call that investing, right? Like you're buying, assets at a lower price that'll be higher in over a given period of time. There's nothing wrong with that. But if you're going to come in here and try to trade futures on the side, and you're going to try to just do this, willy-nilly here and there, you're going to accept too much risk because you're going to want your returns now. You're not going to want to be patient. You're going to lack discipline. And it's all going to stem from bad advice. People, you see someone on here, I just made, my videos, $800 in 30 seconds. True. But you're only seeing that one trade out of the last 10,000 I've taken throughout my trading career. It's kind of like that rock splitter mentality, you know. Everybody will record that final hit that, you know, splits that huge rock, but no one looks at all the freaking hits before that that led up to this trade aligning, to this time in my life where I'm able to call the market. I'm able to know when the market's slowing down. I'm able to know at this minute it's gonna go wonky. It's time to walk away. It's time to take profits. And you only get that through your expectations of what you think your outcome should be, having the patience to go through it, and then, you know, applying discipline. You know, some days don't go well for me. Some days I don't execute the trades I see, and that's very frustrating. But I've learned that if I try to chase things, if I try to deviate from my plan, it may work here and there, but in the end you build a bad habit and it's going to show up at the worst possible time. So be careful who you tell your trading journey to. Be careful who you decide to align your expectations with. You know, I'm here to tell you that flipping small accounts is next to impossible. Not impossible, because I do think people can do it, but do I think it's probable? No. And in an industry where the failure rate's very high, you ought to align yourself with high probability success margins. So, you know, that's about all the advice I have right now. I'll try to make more videos kind of explaining like the trading process, and because I feel like this is not talked about enough. I think that everybody will get on here and try to tell you what these charts are saying, and cool if they can, you know, but if you can't understand how to trade with yourself, then I don't think the amount of knowledge of reading charts is not going to be very beneficial to you. So if you like what I had to say and you want to hear more, just, you know, subscribe to the channel, like the video. That lets me know that, like, okay, we can go down this direction a little bit, but that's just some thoughts I had today. So take care, guys.